Like, subscribe, and hit the notification bell for more videos.
Mexico is becoming America's factory. Did you know that Mexico has become the United States' largest trading partner? While China continues losing market share in North America, Mexico keeps gaining ground. Why? First of all, geography. A truck can deliver products from Monterrey to Texas in hours, while shipment from Asia can take weeks. Second, companies want more secure supply chain. Recent geopolitical tensions, tariffs, and disruptions have pushed manufacturers to diversify production closer to their customers. And third, the USMCA agreement continues giving companies a competitive advantage when manufacturing in Mexico. The result? More factories, more warehouses, more logistics activities, and more foreign direct investment flowing into industrial markets such as Monterrey, Saltillo, Querétaro, Guanajuato, San Luis Potosí, and Ciudad Juárez. Mexico is no longer competing only in labor costs. Today, it is competing on speed, reliability, and strategic access to the North American market. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. Stay tuned with Gesher Group. Despite trade tensions and tariffs, global companies continue investing in Mexico. Mexico started 2026 with nearly $5.8 billion in announced investments, spanning manufacturing, automotive, industrial parks, energy, food production, and pharmaceuticals. One recent example is Japanese supplier Siren Biotech, which inaugurated a new plant in Guanajuato with an investment of approximately $800 million. Meanwhile, General Motors confirmed it's moving forward with $1 billion investment plan in Mexico through 2027, reinforcing its manufacturing footprint and supplier network across the country. The message is clear. Companies are still choosing Mexico for its workforce, logistics, and access to the North American market. And while most headlines focus on Monterrey, significant growth is also taking place across the Bajío region, including Guanajuato, Querétaro, Aguascalientes, and San Luis Potosí. If your company is evaluating an expansion build-to-suit project or industrial lease in Mexico, Gesher Group can help identify the right location and property. Stay tuned with Gesher Group. The USMCA was designed with a built-in review after 16 years. If all three countries agreed, it could have been extended for another 16 years, providing long-term certainty for investors. Instead, the United States has signaled it wants to keep the agreement under the original timeline, with annual reviews leading up to its expiration unless the parties agree otherwise. I believe that creates unnecessary uncertainty, and here is why. The future prosperity of the United States won't come from bringing back every labor-intensive manufacturing job. The world's wealthiest economies don't compete on low-cost labor. They compete on innovation, capital, technology, engineering, finance, intellectual property, and high-value services. Manufacturing is essential, but not all manufacturing creates the same value. Advanced industries like semiconductors, aerospace, robotics, artificial intelligence, pharmaceutical, and defense generate far greater value than basic assembly operations. North America is stronger when each country focuses on its competitive advantages. The United States can continue leading in advanced manufacturing, research, technology, engineering, and high-value services, while Mexico provides world-class labor-intensive and mid-value manufacturing, supported by competitive costs, skilled workers, and strategic proximity to the U.S. market. That's not competition, that's a specialization. A stronger North America supply chain benefits all three countries far more than trying to make each country do everything. At Gesher Group, we help companies relocate and expand their manufacturing operations in Mexico while keeping their high-value engineering, technology, and corporate functions. That's how North America remains competitive in the global economy. Stay tuned with Gesher Group. Everyone says Mexico's greatest competitive advantage is cheap labor. But what happens when another country becomes even cheaper? That's the wrong competition. The real race isn't about who pays the lowest wages. It's about who creates the most value. Countries like Japan, South Korea, and Germany didn't become economic powers because they were cheap. They invested in engineering, innovation, automation, and research. Today, they export technology, not just products. Mexico is now at a turning point. Nearshoring has brought record levels of foreign direct investment, and companies from the United States, Europe, and Asia continue expanding here. But the next wave won't be one with lower salaries. It'll be one with infrastructure, reliable energy, skilled talent, AI, robotics, semiconductor supply chain, and advanced manufacturing. That's why industrial parks are evolving. They are not longer just warehouses. They're becoming complete industrial ecosystems where companies can innovate, automate, and scale. The question is no longer whether companies should invest in Mexico. The question is where in Mexico they should establish operations to remain competitive over the next 20 years. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. Stay tuned with Gesher Group. Mexico's industrial real estate market is not slowing down, it's evolving. According to AMPIP, investment in industrial parks is expecting to increase by nearly 37% in 2026, reaching almost 5.8 billion. Most of the capital will go into the industrial parks and build-to-suit facilities driven by manufacturing and logistics demand. At the same time, companies such as General Motors, Bayer, AstraZeneca, L'Oreal, Leoni Wiring Systems, and LS Cable and System are expanding their operations across northern Mexico, the Bajío, and central Mexico, reinforcing long-term confidence in the country. The biggest challenge? Power infrastructure. Developers agree that expanding electricity capacity will be critical to supporting the next wave of foreign investment. For companies planning to manufacture in Mexico, choosing the right location has never been more important. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. As industrial investment continues growing, selecting this right site can make all the difference in long-term success. Stay tuned with Gesher Group. Good morning, everyone. Mexico's auto parts industry has just reached another historic milestone. During the first quarter of 2026, national auto parts production surpassed $31 billion, representing growth of nearly 10% compared to last year. What's driven this growth? Demand from the United States remains strong while manufacturers continue bringing production closer to North America through nearshoring strategies. The biggest winners include electrical systems, transmissions, engines, electronic components, and advanced manufacturing parts that support both traditional and next-generation vehicles. This is important because auto parts are not just products. They are the backbone of Mexico's manufacturing economy. Every new supplier, every new production line, and every new contract create demand for industrial land, factories, warehouses, logistics services, and skilled labor. That's why states such as Nuevo León, Coahuila, Guanajuato, Querétaro, San Luis Potosí, Chihuahua, and Aguascalientes continue attracting automotive investment. Mexico is no longer just assembling vehicles. It is becoming one of the most strategic automotive supply chain hubs in North America. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. As automotive suppliers continue investing across the country, strategic industrial locations will play an increasingly important role in supporting future growth. Stay tuned with Gesher Group. Mexico's industrial growth has one big bottleneck: electricity. Nearshoring is bringing more factories, logistics centers, data centers, and industrial parks into Mexico. But for companies choosing where to expand, the question is no longer only where is the land. Now the question is, where is the power? That is why the new alliance between Grupo Mexico and BlackRock's global infrastructure partners matters. Together, they plan to combine power generation assets into one of Mexico's largest private electricity platforms, with 14 plants and more than 4,500 megawatts of installed capacity. For industrial parks, this could be strategic. More private generations can help support regions with high manufacturing demand, especially where automotive, logistics, mining, rail, and heavy industry need reliable electricity. And this is exactly where nearshoring becomes real. Because without energy, there is no factory. Without substations, there is no industrial park. And without reliable power, Mexico cannot fully capture the next wave of foreign direct investment. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. As energy becomes one of the most important factors in site selection, choosing the right industrial location will be more critical than ever. Stay tuned with Gesher Group. Hello everyone, today I would like to show you a large-scale industrial land opportunity in the heart of Mexico's manufacturing corridor. This property consists of approximately 2,020,000 square meters or 202 hectares, equivalent to nearly 500 acres, located in San Luis de la Paz, Guanajuato. Its strategic location provides direct access to the Bajío region, one of the most dynamic manufacturing hubs in North America, connecting companies to Querétaro, San Luis Potosí, Guanajuato, Monterrey, and the U.S. border. For industrial developers, logistic operators, manufacturing companies, and investors, land parcels of this size are becoming increasingly difficult to find. The region continues to benefit from nearshoring, foreign direct investment, automotive production, advanced manufacturing, and supply chain relocation into Mexico. Whether the vision is an industrial park, logistics hub, manufacturing campus, data center, or large-scale mixed industrial development, this type of properties offers the scale required for the long-term growth. At Gesher Group, we help companies establish and expand operations in Mexico through industrial real estate and soft landing services. Stay tuned with Gesher Group. Everyone talks about automakers investing in Mexico, but the real story is what happens after they arrive. When an OEM expands, dozens of suppliers follow. This year, companies such as Yasaki, Hyundai, Wia, Hirschvogel, and Siren Viscotec have announced new investments, expansions, or facility across Mexico. These companies may not have headlines like Tesla or BMW, but they manufacture the components that keep the automotive industry moving. Nuevo León continues attracting advanced manufacturing. Querétaro strengthens its aerospace and industrial base. Guanajuato and the Bajío remain key destinations for automotive suppliers. And here is the key. Every new supplier creates demand for industrial spaces, logistic services, and additional suppliers. That's how industrial clusters roll. At Gesher, we help companies secure industrial land facilities and expansion opportunities across the Bajío and northern Mexico. Because in manufacturing, growth rarely comes alone. It arrives with the entire supply chain. Stay tuned with Gesher Group. Everyone talks about nearshoring and foreign investment, but let's talk about industrial leasing costs. In Monterrey, Class A industrial facilities can command leasing rates of approximately $8 to $11 per square meter per month. In Querétaro, leasing costs are often found in the $6 to $8 range. San Luis Potosí and Guanajuato frequently offer Class A facilities between $5 and $7 per square meter per month, depending on locations and specifications. So does a lower leasing cost automatically mean a better opportunity? Not necessarily. Companies must evaluate labor availability, energy infrastructure, rate connectivity, highway access, and proximity to suppliers and customers, because the right location can create far more value than a lower lease payment. The real question isn't where leasing is cheapest, it's where your operations will be most competitive. At Gesher, we help companies evaluate industrial opportunities across the Bajío and northern Mexico to find the right balance between cost, infrastructure, and long-term growth. Stay tuned with Gesher Group.
Like, subscribe, and hit the notification bell for more videos.